Everything that I'm going to explain to you in this video is going to be all the tools that I use every single day when it comes to trading and how you can go from the starter day trader to making $10,000 to $20,000 a month. No BS, straight to the point. This is not including any of the money that I've made from any of my options brokers. This is just futures trading, which is primarily what I'm going to talk about, and the indicators I'm going to go over with you as well. The same principles apply to options and stock trading, but this is just over the past few months from this year. I couldn't even go back to January. I have to go back to some of those statements, but you can see how those are doing. The attached states, you can even see like some of my Wells Fargo hanging off over the edge. This has all been posted on Twitter as well. Literally almost 50 grand just there alone, not from anything else. And that is just future trading using these same principles. Now, I want you to understand, when you go look at the chart and you start identifying things along these lines, it's going to be confusing. But I want you to understand as well, when you start to slowly actually put in the work, slowly start to pay attention, and you understand this is a process, I promise you will start seeing that progress. I'm not going to sell you a thing here either. This is 100% free. Let's jump into it. Now, I'm going to be mapping things out a little bit differently. I will be going back and forth to the charts so you have a bit of an understanding, but I want to make sure everything's very clear. And I also want to make sure that you understand what we're teaching here as well. And I want you to understand the psychology of my trading, okay? Then we're going to be going into the indicators as well here, okay? I only use 5 indicators, pretty much, right? It's only really 5. And I'm going to tell you a lot of the other indicators are total BS, okay? I don't care about past information, past time. I care about what's happening right now in this moment, right? That's what we want to see. And that's everything that you're going to learn from these indicators as well. Now, it's very important that we understand the premise of how we trade before we even go into these indicators, because you need to understand what you're looking for and what you want to be putting into your system for you to be trading and making money every single day. So let's jump right into it. The first thing you understand is what we're looking for. So when it comes to trading, I want people to understand literally from point A to point C what I'm looking for. So all I'm doing is I'm identifying levels and zones. And as we go on every single week, because this is going to be an ongoing series, so I recommend you tune in and follow, you're going to learn how to identify these zones. But it's first that we grab a premise of what we're looking for. I also recommend following on Twitter, links down below, okay? That's what you're going to be identifying our zones. From there, we're going into reacting to buyers and sellers. Now, I want to make this really clear. Too many people are going into the market, and even me when I was first starting, going into the market with the viewpoint of this is what I want. This is what I'm expecting. This, you wake up and you just kind of think this is everything that has to happen. You're not making a plan, okay? You're doing what you think is going to happen, what you think is going to work. But what happens when that doesn't happen? Your trade plan crumbles, you start winging it, and then you really fall back to nothing because you have no foundation of what you're doing. So everything that I do is about reacting to buyers and sellers, right? No fair value gaps for me, nothing like that, okay? Important to understand that. And that's not me talking bad about anybody with fair value gaps, okay? We're going to assess the reaction of strength from those levels from buyers and sellers. Again, we'll go more into that. But again, it's all based upon one real system, reacting, right, to what we're getting. Strong or weak reaction, strong, capitalizing the strong reaction, consisting with our trade plan, a weak reaction, going into that reevaluate our levels and zones, or just don't take the trade, which for some reason we don't think is a real thing. But again, our indicators are going to basically concrete these ideas and show us where the good trades are, or show and help us find those trades as well, getting us entries, exits, etc. Okay. Now, at all points in time, you're not always going to be using some of these indicators, but they will help you along the way. Another way that I think people can view this. So let's say every trade you go into, it's basically just a pure line like this, right? And in the middle, right, this is 50%. Okay. So every trade you go into, buy or sell, it's a 50% you're going to win, you're going to lose. Hypothetically, if you just blindly look at a chart. Now, when we use these indicators, right, our goal is to you're never really going to get to 100, right? You're never really going to get there, but the goal is to inch there. That's my goal, is can I get slowly there, right? And so the way that I'm using these indicators reacting is giving me a 2% increase, 3% increase as the more things start to line up with my trade and my viewpoint, and to ultimately giving me a better chance of winning. Now, there's also this premise that you're never going to lose, That's just not a reality, right? That's why I say nothing's ever 100%. And if it was 100%, we would all be millionaires. We'd all be, just swimming in the dough, right? No one would ever lose. That's why you see hedge funds fall during bad market times, right? Because stuff does happen. So it's important to understand what we're doing. So when we're using these indicators, it's just getting us to 55%, 60%, increasing the likelihood of success. It could still go bad, but again, the higher the percent, the better we feel, the more confident we feel, and the better, hopefully, our trades are over time. This is how I view ultimately the system. But now when you don't have a system, let's say you go into it and your trade is a 50% chance of success, okay? And then your trade plan kind of falls apart, where your likelihood of success does move this way. And this was something that I didn't think about till recently, is that as your trade plan falls apart, you really realize you're doubling down on trades, you're getting into more, you're sizing up into a trade when your plan's kind of falling apart and you really have nothing that you're looking for. So it's important to understand what you're doing and what you're really looking for in there. And it's important that we have a visual that kind of solidifies that and makes it easier for us to understand. So I want to make that extremely, extremely clear. Okay. Now, for the sake of today's video, I'm not going to go into a bunch of strategies, a bunch of levels, a bunch of zones. I have previous videos if you want to go look at those. I'm going to be attacking and making new videos over the next few days and weeks. So be on the lookout for that. But today, I think it's important that we grab a viewpoint of indicators and knowing what we should be using. And hopefully you can go test these out this week and come back to the next video. Also, let me know what you think in the comments of these and let me know if any of this helped or if you think I'm wrong. I would totally open to being wrong as well. Okay. The first indicator that we're going to have out there is going to be our VWAP. And I think this is very important. Every indicator you're going to see me mention, besides one, is all going to be in real-time information, right? Or high time frame information, okay? So I'm going to show you how to add all these to your chart. So we're going to go to TradingView. Again, this is what I'm using. You can use your broker. You can use whoever you want, okay? I'm using TradingView for the sake of the video. Most people use TradingView here, so yeah. So what you do is go to indicators. You just type in VWAP. This is what you do, volume weighted average price. Now, it's going to be different on some of these platforms. I'm just going to let you know. So I'll go to a smaller time frame so you can just see it. So on TradingView, and sometimes even like some of these Thinkorswim and other brokers, right? They'll add these bands. So I'm just going to quickly show you what I do. So I get rid of all this, and people always ask me what time frame. VWAP is pretty much a constant. Doesn't matter, okay? So I just get rid of those upper bands, the bands fill, that's it. So I'm just gonna have that line there for me, and that's it. So giving you a premise of what the VWAP is doing as simply as possible, okay? It's giving you a metric of where the most volume is coming in and buying or selling on a specific stock, equity, future, whatever it may be. So when you get close to this price, that's typically why it becomes a support or a resistance, meaning you'll come down and you'll bounce, right? In a good price action environment, right? So I can go to something like NVIDIA here on the day, like a stock, right? You can see, we opened up here on the day, kind of shot up, okay, got below, you got stuck below, and you stayed below it basically for the remainder of the day. That's usually what happens. You'll stay above, stay below, for healthier action. Important to understand that, right? So it's a real-time resistance support, something to be looking at. And also, this can be used for getting into a trade as well. So let's say that I really like a trade. For instance, like I have a trade. I'm just going to pull this up here so you can just see real quick. So I have this is like my target zone up here. This is my entry zone down here. And hypothetically, this is just all hypotheticals for everyone, right? Your stock is moving like this. You come up, you reject. So ideally, in a perfect world, what I want to see is a break, a retest, and continuation. That's perfect. That's what I want to see at all points in time of wherever my levels, entries, VWAP may be. Okay. So what I want to see from this is ideally getting above that, right? So let's say your VWAP is moving along the lines like this. Let's just quickly draw it out so you can see. So your VWAP is just saying right about there, okay? And so let's say that you have your action comes out, and we'll quickly look at this as well. You can see, so the stock price is moving up and down through the VWAP, right? But then you start mounting this level. So you're mounting your key level you're watching, and then you're also mounting your VWAP. Well, that VWAP is a great spot to consider buying. Now, if you start to flip it, then your trend is getting a little bit more bearish. And even though you're showing your support, it's an area of caution because you have that you're underneath the VWAP where majority of the volume and buyers and sellers are coming in. So sellers have the edge there. That's the way that I think about it. And that's putting it as simple as possible. Okay. I want to make sure you understand why and what I'm looking for there. That's the VWAP, as simple as I could possibly put it. The next one, your 9 EMA. I'm starting with the ones that you're going to use probably every day. The 9 EMA, I'm not big on really any EMAs out there. The 9 EMA isn't going to really tell you when to get in a trade per se, but what it's really going to do is help you understand when you're moving in a direction and you're getting continuation, okay? So I recommend the 9 EMA on the 5 minute, right? So what you would do, you go to indicators, EMA, you go down to moving average exponential, click that one in. Let's go down to it really quick. It automatically should be the 9, but I always change mine to red just so if you ever see my channel. Go there, make sure it's there, and I'm not going to pin it or anything. It's just that it should be a 9. The link should be 9. That's all you want to see. Understand, this will change depending on your time frame, so it will adjust. But as you can see here, let's talk about it. So today, this morning, you break above 24,815. Now, this level was very key because it was your previous all-time high, right? So you can see it was our all-time high. September 18th, we broke above it today. Now we go to the 5 minute. Now look at something that happens. You get above the 9 EMA on the 5 minute and you stay above it essentially all day. The second you break below it, the trend kind of changes and we kind of just, range sideways for the remainder of the day. Don't really get any more upside. The 9 EMA is a great tool for continuation to the upside and the downside as well. Then the VWAP, you're probably gonna get 1 or 2 tests of the VWAP throughout the day. If you get a lot of tests, it's probably just a sideways choppy day. But the 9 EMA, you're going to get a lot more test of it for getting that continuation. You can see literally from, this is Friday, this is today at 150, you moved straight up all the way here into basically the end of power hour till market closed, right? So you can see great solid movement overall. You know what you're looking for, why you're looking for it. Makes perfect sense. Again, I don't rely on it for entries, but when I'm in a trade and I have an entry and we're grinding on the 9 EMA, it usually helps me from not getting out of a trade too soon. Or if I'm kind of worrying, should I get in, should I get out? I look at it, I'm like, okay, well, we're grinding above it. I still have a lot of confidence. We look really good. Now, if we're sitting on it for a long period of time, I might just get out, okay? So things to consider if you're finding buyers off that level as well. Volume. Now, I don't think we think of volume as an indicator enough. And something you're going to hear me say on this channel a lot is illiquidity. What does that mean? So illiquidity, giving you a visual, okay? So let's go to something along the lines of UNH. This was, and I'm using equities in this case, even though this is a lot for futures, but I just know this week on some of the trades I took, this is where some of the opportunities were. So UNH, right? So UNH has had this monster move from basically 320 into 360, okay? But something that happened is you moved up in a straight line. And something that's important to understand is when you move up very fast or move down very fast as a stock, you can move in the opposite direction just as fast because there wasn't a lot of buying or selling really taking place or a battle, right? It was just a straight up move. So there was no foundation of resistance. So look what happens. You get below this like a little low there, and then you start making a bear flag here, and ultimately you shoot down from 340 down to 330, 334 pretty quick. And now you're kind of stuck in this, and you're going to be moving pretty quickly back to the downside. Very important to understand, okay? So again, this area is an area of illiquidity, meaning that you're probably not going to chop too long here. You'll get a quick, fast move. So sometimes when you see the NASDAQ or a stock move up or down very fast, typically it's in an area of illiquidity. Makes sense? Hopefully you can understand that. Now, where volume takes place here is typically you're going to get interesting volume on the breakdown or breakout of illiquidity. So as you come in here, you can quickly see, we go to something here, right here, you can see as volume's breaking down here, you get a little shot of volume down, and we kind of stagnate, and then we get another shot of volume as we're breaking down through it as well. Another thing you're going to be able to use volume for is what's happening here as well. So I'm going to give you another for instance. So let's say that you're trading anything, okay, and you have some patterns. Let's say you're using a bull flag, right? So you have the stock price, you have our stock is or equity or futures is moving up, and then you kind of start flagging here, right? Let's say this is how you're moving. Your bear flag or bull flag is right there. Now, where volume is huge, like, and again, we don't look at this enough. I'm telling you, is getting the breakout. So what you want to see with these patterns is sitting, whatever pattern you're using, sitting triangle, head and shoulders, whatever, okay? When you're moving up, typically, you're getting better volume as you're breaking up, right? You're getting better volume. But as you're consolidating or getting that pattern, typically, your volume will consolidate. It will lower. So you'll see volume coming down, okay? And when that happens, when you start to see a surge of volume uptick, right? And as you're breaking out, that's usually a great signal that the pattern is going to break to the upside or to the downside for confirmation. Volume is one of the, if not the best tool when it comes to confirmation, because, indicators can lie, people can lie, but volume typically does not lie. You need to understand that. You don't need to have great volume all the time. But when you get good volume, it makes trading very, very simple. So when I'm looking at volume, it's all about continuation, a breakout, but really telling the story of what's actually happening, okay? Because volume is real-time information. It's happening right now. We need to understand that. And again, not enough people talk about volume as a whole. The orb, opening range breakout. Now, if you are a NASDAQ trader, a futures trader, I'm telling you, you're welcome, okay? And before I go too far into this, I just want to say this really quick. If you guys are looking to get into prop firms or looking at futures trading in general, right now, Tradeify is having a monster deal. Now, my big three right now for anything to do with prop firms are Top One, Tradeify, and MyFunded Futures. I'll tell you right now, okay? But Tradeify is running a monster deal on their 50K accounts. This is just for straight to funded accounts. You do no evals. And they just launched Project X. Pretty crazy, okay? So again, use code HEFE. That's right there. You could also, if you want to do the evals, go to the growth account, which is a pretty awesome deal as well for Project X. You pay no activation fee. It's $100. That's also crazy. I use the 50K accounts. That's what I recommend. Do what you want to do. Anything that I made money for in prop firms is all from 50K accounts. I'll tell you that right now, okay? Now, going back into NQ and what we're looking at here, the opening range breakout. Now, there's so many of these that you're going to see out there. So you type in ORB, opening range breakout. We'll just use this one for an instant here. Go to the 5 minute. This will usually only show up as well on smaller time frames. I'll tell you that right now. So your ORB, this one will just pop up automatically. But you just want to make sure you sync this to the right time. So I am in Central Standard Time. So I need to go to 8:30 right here. Let's go to 8:30 to 8:45. Did that first 15 minutes of market open for the New York session? Boom, right there. And so what this does, giving you a visual, it marks out the first 15 minutes of the market open, the high and the low of that range. And I will tell you, I don't care what anyone says, I think the ORB, the opening range breakout, is one of the best tools you could possibly use when it comes to trading. As you see here, this is today. The action wasn't that great. It's ranging back and forth, back and forth. Once you get above it, you kind of go crazy. You really never look back. Premise of this is you don't do a lot of your trading within the range. You want to do most of your trading outside of that opening range because that's where you get most of your movement, as you can see here. The previous day, very similar type of action. You kind of break out, you go crazy, and at the end of the day, you mount above it right here. Or this morning, you mount above it and you go up, straight up. So again, I have tons of videos on this as well. Very helpful, very simple, but really you're looking for the breakout of the top or the bottom of that opening range. Very simple. I have tons of videos on this on the channel as well. You can do deep dives on it all you want, okay? The last one here, and again, some of you guys might not like it, okay? But it's revolving. I can't click it. What's going on? It's revolving high time frames, major moving averages, okay? I see people all the time. When I say all the time, ladies and gentlemen, I mean all the time. All the time mentioning and talking about, EMAs and moving averages. The reality is all moving averages are based off of past candles and action, okay? Now, what hedge funds use, and you'll see this on CNBC, you'll see it on any like reputable stock show or channel. If they pull up a chart, if there's going to be any indicator on there besides like volume, right? You're going to see this indicator, okay? Now, depending on what you're using, on TradingView, it's SMA, but that stands for not smooth, it stands for simple, okay? If you're on a platform, it might just be MA, moving average, because you just want just a regular moving average. It's just the price. There's no other math that goes into it, okay? And so what you do is we're going to and you can do a few of these, right? But the main one you want to see is going to be your 200 daily moving average. Now, this also goes for, and you're going to go to, and this is very important, okay? You go into it, type in 200, go to your time frame, and you want to pin this to the daily, okay? So this means when you switch from the 5 minute to the 50 minute, the level stays the same. It doesn't adjust to your chart. This also applies to the weekly as well. I don't want to go down a list of 100 different moving averages. I want to make that really clear. I don't want to do that. Your major ones you're looking at are the 200, the 100, and the 50 moving average. You're going to realize you do not test those levels often, You're not supposed to, okay? So that's what you do. You hook it up to that. So for the sake of this, I'll just turn on my 250 and my 200 daily. My 200 daily, my 50 daily moving average, okay? And so you can see really quickly, you don't often test these on the NASDAQ. Very rarely, okay? Very, 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 very rarely, okay? The 50, you're grinding above, really good action. The 200, you will test the 200 at moving average like once every 2 years, okay? But understand, especially with stocks, when you're above your 200 daily moving average, you are classified as a bullish. You're moving bullish, right? You're reclaiming a bullish trend if you're just getting back above it. The NASDAQ remounted its 200-day moving average. You broke and you retested it right here of May 23rd of this year. And look what happened. You ended up running from 21.2 to 20 new all-time highs. The previous test of this was August 2024. This was your Japan, remember the Japan carry trade? You tested it, had a little bit below it. You got back above it. You moved up another, like, what was that, 2,000 points. Retested it again. You proceeded to move to all-time highs. I can go on and on. You tested it here October 2023. When you tested it, you ended up moving it from 16,000. You didn't really get another big pullback until 20,000. I'm just showing you how relevant these are. Okay? You're not going to be looking at these all the time, but it's important to know where they're at. So if you ever get confused, if you're looking bullish, bearish, if you're trying to find an equity or a stock and it's like, okay, well, this is a major dip, where's the 200-day moving average? That's the first question we need to be asking. So it's important that we're understanding that. And I'm telling you right now, if you're going to come back to the channel and you're going to come back, because we have a lot to dive into, okay? This is some of the previous stuff we went into. Everything that we do builds on each other. Everything we're going to do. It's all going to revolve and build back on top of each other. So you need to make sure that you're understanding these few things. Number one, what we do here, it's not based upon feelings. It's not based upon emotions. Everything that I do is based off of previous levels, previous zones, and where buyers and sellers have showed up time and time again. You're going to see also based off of cases that we're going to use here, the accuracy. You're going to be able to back test this for yourself, which I recommend. You should never trust anyone on the internet, especially about financials. Do your own research. You need to go back, make sure we know what we're talking about. Check us if we're wrong. Check us if we're lying, right? I recommend that for anybody and everybody. And on top of that, you need to understand that not only is this how we trade for me, but everything that I just mentioned here backs this up. You're going to notice something here as well. Everything that we're going to talk about is going to revolve in a circle. It's going to build, and then we're going to go to our next part. And then if you have a question about that part, it's going to come right back to this part. Everything is going to be a stepping stone. So if we mess up on one of those parts, we just go back to the previous step. You should never be messing up and going all the way back to step one, unless you have a massive blunder, which does happen. That's my viewpoint. If you have any questions, comment down below. See you guys next time. Have a good one, traders.